All right, thank you all for tuning in to WJC LP 98.3 FM Chicago. Welcome to my show, Money Talks, where all we talk is money. And I'm your host today. My name is Jeff Badu. I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. And what we do is we provide a suite of financial services, including our marquee company, which is Badu Tax Services, and that's the firm that does tax preparation, tax planning, and tax representation for individuals and businesses across all 50 states in the U.S., and we also have clients in over 25 countries at the moment. Then we have Badu Investments, LLC, which is our real estate investment company, and that's the company that provides real estate. Basically, we invest in apartment buildings, rental properties, mainly on the south side of Chicago, in efforts to restore traditionally underserved communities. And then we have Badu Life and Health Solutions, LLC, which is our life insurance company. Shout out to my wife, Yvonne. That's Yvonne Badu, who's the CEO of the company. What we do is we provide life insurance products and solutions to individuals, families, and small businesses. And then we have the Badu Foundation. Happy Giving Tuesday tomorrow. The Badu Foundation, we're doing a fundraiser, by the way. What we do is we provide financial literacy education to the youth ages 6 to 18, where we teach them on topics such as budgeting, saving, investing, and in scholarships. All right, and my purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle. All right, so with that being said, definitely want to thank everyone for tuning in to WJC LP 98.3 FM Chicago. You can catch us live on the radio on 98.3 FM in Chicago. That's right, in your car on the radio. Or you can go to our website, WGHCradio.org, WGHCradio.org. We are a 501c3 nonprofit organization. And in advance of Giving Tuesday tomorrow, anything you donate will be tax deductible. And I do want to shout out to the Badu Foundation as well. Right, we're doing our fundraiser, big fundraiser tomorrow for Giving Tuesday. Happy Giving Tuesday in advance. We're looking to raise about $10,000 this Giving Tuesday. So we have the campaign right now on Facebook and Instagram. So if you go to my pages right now, you can actually donate. Hey, any amount is deemed definitely. Any amount is wanted, any amount is needed to support the kids. And what we do is we teach budgeting, saving, investing, and also scholarships to the youth ages 6 to 18. And next year we have a program that will have 100 students in there, all via Zoom, students all across the country and underserved communities. And we're looking to give out scholarships, $500 scholarships to each of the students, if possible. And then if we're not able to hit our funding goals, then we'll give it to a select amount of students. That's how we usually do it. Our website is badufoundation.org. Once again, that's badufoundation.org, BADU foundation.org. So I do want to thank everyone for tuning in, WJC LP 98.3 FM Chicago. And we're also streaming live on Facebook and Instagram. If you don't mind just liking and then sharing this video, it's always greatly appreciated. Right, just liking the video, sharing the video to your friends, tag a friend. You can make a true difference in somebody's life today. Maybe you know the information, but maybe your friend, your family member, your colleague don't necessarily have this type of information. All right, so I strongly encourage you to tag a friend, reach out and just ultimately, spread the word, spread the knowledge. All right, so I do want to shout out. Let's see, we got Desi from the Badu Tax Services team. Shout out to Desi. Thank you for joining on Instagram. She's also a very, very heavy promoter of the Infinite Wealth course. All right, we'll be talking today about the 3-step Infinite Wealth Building Formula. The 3-step Infinite Wealth Building Formula. All right, we'll be talking about that today. So this is the show Money Talks, where all we talk is money. All right, we come here every Monday night from 7 to 8 p.m. Central. All right, we're live on the radio itself, 98.3 FM. We're on WGACradio.org. You can actually watch the live stream. And then we're also on Facebook, and then we're on Instagram. Usually when I look straight, I'm looking at the Facebook camera. And then when I look to my right, I'm on the Instagram camera. So we're streaming live simultaneously. hey, in the future, we might have more cameras in here, to shoot different types of live streams, right? YouTube, LinkedIn, whatever it is. All right, so today's topic, we're talking about the 3-step infinite wealth building formula. The 3 steps to building infinite wealth. All right, so for me, it took thousands and thousands and thousands and thousands of hours just to do research on what I'm about to teach you today. You're literally getting 1,000+ hours worth of research, training, intense development, all packed into 1 hour. Now, of course, there's more. There's an Infinite Wealth course, which for those that need to leave early, let me just put this out there now. For those on Instagram, just go to the second link in my bio. All right, go to the second link in my bio and then type in the code HUNGRY. Type in the code HUNGRY and you get 60, right? Black Friday / Cyber Monday special. You get 60% off the Infinite Wealth course. All right, let me go ahead and put the direct link in the chat for those who don't have it. So for those on Facebook, just go to my website, jeffbadu.com. Once again, that's jeffbadu.com, and you can actually get the direct link to the course. So right now, what I'm doing is I'm basically putting the links in the chat, just so you'll be able to, basically get the direct link, right? The direct link to the course. But for Instagram, all you got to do is go to my bio. You go to my page and click the second link in my bio. It's called the Infinite Wealth course. And you get 60% off if you type in the code HUNGRY. All right, don't miss out. We got a lot of testimonials, especially one from my boy James. Shout out to James from Facebook. And he was able to leave a very, very good and positive review. I mean, he thoroughly enjoyed the course. Stayed up till 3 a.m. watching the course the night before Thanksgiving. Can you imagine? Right? He said, hey, the turkey will come later. All right, let me get my education now. Let me get that right. And, man, that was a powerful, powerful testimonial. All right, so what I'm doing now is I'm just posting the direct link to Instagram, and then I'll post it to Facebook. For some reason, this autocorrect stuff, they really got to fix this autocorrect sometimes. That's exactly what I'm struggling here doing. All right, so Instagram, you're about to get the link in a second, right? But remember, it's just a second link in my bio. So let me go ahead and fix this real quick so that you don't go to the wrong link. I would hate for that to happen. All right, so we got... All right, so Instagram is about to get the link. So basically, for IG, just go to the second link in my bio, or you can go to jeffbadu.com. I'm about to post the direct link into the chat right now. And then I'm going to pin this to the top for you. And remember, type in the code HUNGRY, right? Type in the code HUNGRY, and you will get 60% off. Not 50, but 60% off. All right, and then Facebook, I'm also going to do the same thing for you guys. But remember, you just go to jeffbadu.com. That is my main website. And the reason why I'm doing this now, because sometimes I like to get in the zone, when I'm teaching. All right, so I want to make sure you guys have the link in advance in case you need to leave early. Just go to jeffbadu.com and you can get the direct link to the course. But let me go ahead, and I've already posted it on IG. Let me post it on Facebook. Let me make sure it's correct. I don't want any typos or anything like that. All right, here we go. All right, so Facebook, you have the link now. Let me go ahead and pin it to the top. Yes, I am doing this all simultaneously while talking to you guys today. All right, here we go. All right, so the links have been pinned to the top, so you can feel free to check out. That's the Infinite Wealth course, right? 3-hour Infinite Wealth course that just takes you through the realm of how taxes work, how businesses work, how to set your budget correctly. It's basically your one-stop shop for Business 101, let's call it. Business and Personal Finance 101, basically. That's what the Infinite Wealth course was created to do. And it's also meant to help you avoid legally avoid paying income taxes, meaning you will never have to pay taxes another day in your life after going through the course and, get this, and executing everything that's actually stated in the course. If you follow it step by step and you don't miss a step, right, you will get the results that you want. And today we're going to basically give you some of the ingredients. We're going to give you the 3-step infinite wealth building formula. And before we get into that, let's do a quick market report. So we'll do this report, a recap, for about 5 minutes. We like to do a recap. So if you want to grab some water, you want to grab some tea, you want to grab a notepad, right? You want to grab a notepad or something like that, you can feel free to do so. But with that being said, let's go through a quick 5-minute market report. All right, so this is as of November 26, 2021. Happy belated Thanksgiving. To those that I couldn't tell, happy Thanksgiving. My apologies in advance. But this market report is as of November 26, 2021. All right. So basically, last week was Thanksgiving week. It was a short week due to Thanksgiving. So Thanksgiving week proved to be a tumultuous one for investors. Something really, really bad happened at the end of last week. And that was last Friday. All right. I'll tell you what it is in a second. Each of the benchmark indexes listed here essentially ended the week in the red following news of a new COVID-19 variant. Just when we thought the pandemic was about to quote unquote end, if there ever will be an end, a new variant hit South Africa. All right. Everybody was celebrating, having a good time during Thanksgiving, getting stuffed with turkey. I mean, I was full, by the way. I think I might have fell asleep around 10 or 11 o'clock or so. But basically, right after Thanksgiving, I wake up in the morning and all of a sudden I see this new variant out in the world, South Africa. I see the stock market tank. Anytime you see the stock market tank by more than, let's say, 1 or 2%, that lets me know something is going on in the world. Immediately I popped up on my phone. Next thing you know, they say that this new variant, this new COVID-19 variant has popped up in South Africa. And it's spreading across Europe and other African countries as well. All right. So what this does is anytime there's a new variant, anytime there's something like this, investors hate it. Because what it does is it slows down economic growth. There's shutdowns, first of all. There's going to be shutdowns of the borders. We're already having a supply chain issue. We're already having a labor shortage issue. Now you add a new variant. What happens is it escalates this even more. And get this, at a time during when people shop the most, around Black Friday, Cyber Monday, you have all these big days, and then all of a sudden you have this new variant, which basically disrupted the markets. So when a new variant happens, the borders start shutting down and restrictions come in play. All right. And then what happens after that is now companies can't sell you more stuff because the more stuff isn't being made, nor can some of that stuff be sold to you. Thank God for online shopping and everything like that. So what happens with that is investors get scared and like, man, Apple now can't sell iPhones. Right. Let's see. Amazon can't sell stuff. And what happens is they start selling. They call this a sell-off. They start selling in advance because they're afraid that the market is going to go down even more, when little do they know what goes down just goes right back up. So investors sell off of fear. They sell off of emotions. You should never, ever, ever get your emotions tied up in the stock market, right? So I understand there's a new variant or whatever it is, but that should not cause you to be selling stocks. You should be buying more stocks. Right, and guess what happened? The pharmaceutical stocks, oh man, Novavax, right, Moderna, these big pharma companies, I kid you not, Moderna went up 20% last Friday, and today went up another 11%, 31% in 2 business days. 31%, Moderna, right, Moderna, the biotech, the pharmaceutical company. The moment a new variant hits, guess what pharma does? It skyrockets. Why? Because we have a problem. Anytime we have a problem and you have the solution, the potential solution, well, guess what? Your stock price is bound to go up because everybody's going to be turning to you for the solution. As a matter of fact, Moderna has already started developing a vaccine for the new variant that just came out last Friday. Can you imagine? They've already come out with a potential new vaccine for the new variant. And it just came out, quote unquote, last Friday. If that's not a bit of a conspiracy, then I don't know what conspiracy really means, to be honest. Right? So understand that there's a bigger picture behind all of this stuff. The stock market overall went down, but Moderna, man, that thing went up nice. And also Novavax last Friday went up pretty nice too. And also all the other pharmaceutical stocks as well. So understand that just because one sector or the overall market is going down doesn't mean that some sectors are also going down. Look at where the problems are. Look at where the problems are and look at the companies that have the solution for it. Why did Zoom go up so much last year? Because there was a problem with in-person, physical stuff. So they came up with, or they already had a technology solution, and that's why their stock price went up. If I can guess right now, I don't know it right now yet, but if I can guess, Zoom is probably up again this year because restrictions, no in-person, no hand-to-hand, physical or anything like that, virtual world, virtual meetings. So when you have a solution to a problem, your stock price is bound to go up. So if you're looking for good companies to invest into, it is the ones that are solving the problems of the world. All right, so just something to keep in mind. So let's keep going. And I know that was a little longer than we expected, but just wanted to explain to you how the market works. In response to several countries, right, including the United States, initiated travel bans and tightened border controls. So there you go. Why are investors so scared? Is because of the fact that there's all these bans, these restrictions. Crude oil fell 13.5% last week. Holy, right? That's a big jump, or that's a big decline. Crude oil fell 13.5% in the week. 13.5%. Why? Because they're afraid people won't be traveling. They won't be driving as much or flying as much. Right? So oil, which fuels gas, basically went down. So you always have to understand these things and how the market works. Do not try to time the market, because there's no way you could have predicted that a new COVID variant would come out last Friday. Unless you're a pharmaceutical company, maybe. Right? So just something to keep that in mind. Yield on the 10-year treasuries did go down 10 points. All right. And yeah, treasuries, bonds are horrible right now. Okay, so let's see what happened last Monday. There was a sell-off in the tech shares, which pulled the NASDAQ back. The NASDAQ, by the way, is composed of the top technology stocks in the U.S., the top technology companies in the U.S. S&P 500 went down 0.3%. So things pretty much went down because there was a sell-off in technology. And the S&P 500 does include some of your favorite technology stocks like Apple, Tesla, Amazon, Microsoft, Google, all within the S&P 500, which is composed of the top 500 companies in the U.S., essentially. All right, Tuesday, stocks continued to tumble, unfortunately. NASDAQ went down 0.5%. S&P 500 did go up a little bit, went up 0.2%. And then Wednesday, gains in real estate and energy sectors helped drive the S&P 500 higher last Wednesday. All right, NASDAQ reversed course and let the benchmark indexes, let's see here. All right, and then investors got mixed reports last Wednesday. The Federal Reserve released the minutes from its early November meeting and noted that it would not hesitate to take appropriate actions to address inflationary pressures. How do you address inflation pressures? You increase interest rates. Right? You increase interest rates. That means that you basically reduce the money supply, the money that's coming in. You basically printing less money. You're putting less money into the economy so that it avoids inflation. All right. And then let's see here. So since that meeting, inflation has continued to rise, which could prompt the Federal Reserve to quicken the pace of tapering its bond purchase program. I like how they always say the word tampering, right? They're tampering with the data a bit. And so the Federal Reserve does, in a way, control what happens in the market. All right. On the other hand, consumer spending rose in October from a month earlier. But the biggest news was that the number of weekly claims for unemployment benefits dipped to its lowest level since 1969. All right, so last Thursday the market was closed, but Black Friday, major shopping day after Thanksgiving, investors reacted to news of another COVID-19 variant in South Africa. All right, and the market, all hell broke loose, right? So basically, Russell 2000 went down 3.7%, Global Dow went down 2.7%, the Dow went down 2.5%, and then the S&P 500 went down 2.3%. NASDAQ went down 2.2% as well. So things went really south last Friday. So far this year, the Dow Jones is up 14.03%. NASDAQ is up 20.20%. 20.20%. It's still a massive gain, but the number one sector, the number one index, the S&P 500, composed of the top 500 companies or stocks in the U.S., is up 22.33% so far this year. Man, imagine being invested into that index, what that can do to your money. Russell 2000 is up 13.73%, and then the Global Dow is up 13.63%. All right, so what to look forward to this week? The Purchasing Managers Manufacturing Services reports for November are available this week. Respondents have noted that while manufacturing and services sectors continue to expand, each area has been impacted by supply bottlenecks and labor shortages. Those issues are expected to remain through the year, which will further drive inflation. So why is inflation going up? Because supply is down. What happens when supply is down? Prices go up. And then also demand goes up. What happens when demand goes up? Prices go up. What happens when you have the two things happening? Prices escalate. Typically, inflation is at 2 to 3%. But this year, inflation is between 5 to 7%. 5 to 7%. That means if your money is sitting dead in the bank, literally dead in the bank, earning 0% and inflation is at 7%, you're losing 7% of your money's value. So why do we need to invest? Number one is to beat inflation. Number two is to take advantage of compound interest. All right. It is not a choice to invest. It is a requirement. You have to invest. You've got to invest your money, because if you don't, it will get eaten up by inflation, and the dollar, the piece of paper you got in your wallet or in your bank account, it starts becoming worthless. So that's why you need to buy assets, whether it be stocks or preferably hard assets, physical assets, such as real estate, rental real estate, which, by the way, is part of the three-step infinite wealth building formula, which we'll talk about in a second. The November employment figures are also out at the end of this week. Over 500,000 new jobs were added in October, and hourly wages rose by 0.4%. All right, so there you have it. That's the market report. So let's take it a step back. First of all, if you're just now tuning in, thank you for tuning in to WGHC LP 98.3 FM Chicago. We're live on the radio on 98.3 FM in Chicago. You can also catch us live on WGHCradio.org. Once again, that's WGHCradio.org. We're here every Monday night from 7 to 8 p.m. Central. Right? Every Monday, 7 to 8 p.m. Central. And we also stream it live on Facebook and Instagram. If you're on Facebook and Instagram, please, if you don't mind, just liking this video, sharing the video, and also tagging a friend or two. And last but not least, just type in the comments, right? Type in the comments where you're listening from so that we can give you a shout out. Just type in the comments where you're listening from. And so with that, remember, today we're talking about the three-step infinite wealth building formula. I personally have invested over 1,000 hours of my personal time into developing a formula, a system, a tool for everyone, for society as a whole, especially those who live in the United States of America, home of the free, land of the brave, right? Basically, a system, a tool, a formula that allows you to navigate through the tax system, to navigate through the wealth building process so that you can build a long-term sustainable multi-generational wealth on a tax-free basis. The 3-step infinite wealth building formula. Now, after listening to this, and I do encourage you to rewatch this, take some notes, share it with a friend. After listening to this, what you can do is you can enroll into the Infinite Wealth course. We actually have a course. It's a 3-hour course, right? A 3-hour course. Shout out to my boy Jeremiah for shooting the course and his team. You know, definitely always appreciate you looking out. 3-hour course, right? And it is online. It is online. You don't have to go anywhere. You don't have to meet anywhere. It is at your own pace. It's a 3-hour course. You can probably get through it in a day or so. And basically, it's talking about ways, basically it incorporates the 3-step infinite wealth building formula, but more importantly, how to build multi-generational wealth on a tax-free basis. How to avoid being the average person who's paying 40% of their hard-earned dollars to Uncle Sam, the uncle that we all may hate. All right, the uncle that comes to the Thanksgiving table and eats up all the turkey. All right, so with that being said, the Infinite Wealth course allows you to basically go through the lens and learn about things like tax write-offs. All right, tax write-offs, the tax deductions, things you reduce your taxable income by. S corporations, how to avoid paying the self-employment tax. All right, record keeping, how to keep good books and records. Let's see here, payroll, how to set up an LLC, how to set up your business entity. And then QuickBooks, how to keep track and keep organized of your income and expenses. And then last but not least, the wealth building piece, which talks about budgeting, saving, real estate, right? Investing, and then also insurance, life insurance to be exact. So today, we're just going to break down and pick out 3 of the topics and just go through with you. What I've done for you guys is after you're done or simultaneously now is you can go to, I've posted the links I've pinned it basically on Facebook and Instagram, or if you go to my Instagram bio, my IG bio, it's the second link in my bio, right? It's called the Infinite Wealth course. And if you type in the code HUNGRY, you get 50% off. I always say this. It's actually revamped. 60% off, right? 60% off the Infinite Wealth course. That's the Black Friday. That's the Cyber Monday special, right? 60% off the Infinite Wealth course just by typing in the code HUNGRY, right? Typing in the code HUNGRY. You get 60% off. That's what we're doing for Black Friday and Cyber Monday. The code does end tonight. Code does end tonight at 11:59 p.m. Central. After that, there's no more sales, no more specials for the year. So tonight is the last night that you can get 60% off the Infinite Wealth course by typing in the code HUNGRY. I've posted the links in the chat. And you can also get that second link in my bio on IG and then jeffbadu.com for Facebook as well. Shout out to Mr. _ Mr. Marshall, right? Absolutely. Appreciate you for joining us today, Mr. Eugene Marshall. He said, best course out. Absolutely. Best course out. Thank you, Gene, for sharing that. That's the Infinite Wealth course. Everybody, right? Everybody should tune into the course, get some knowledge, get some education. But the 3-step infinite wealth building formula, that's what you guys came out here today for. We're going to spend the next 25 minutes going through the formula. All right, and I really want you guys to take notes. Take this stuff seriously. Don't go into 2022 being the guy or girl that pays 40% to Uncle Sam. I would hate for you to be that person. I used to be that person, and I hated it so much. So what I did in 2015 was I educated myself. I'll tell you this right now. I went to college, the University of Illinois at Urbana-Champaign, one of the top 2 accounting schools on the planet. I studied accounting. I got a master's degree in accounting. And the things that I've learned now after college, they never taught me in college. So what does the Infinite Wealth course do? It breaks it down for you. And it's simple. You'll be shocked how simple the course is. We have testimonials on the website that state how simplified the course has been. It's been created to be simple for those who don't understand taxes, or those who are even the most advanced when it comes to taxes. All right. So basically, in 2015, I said, you know what? I need to take it upon myself to learn this stuff on my own, and then eventually be able to teach it to others so that I can empower them to live or create an abundant lifestyle. Remember, my purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant, not a scarcity, but an abundant lifestyle. And so I wanted to provide resources, education. And that's why I created the jeffbadu.com website. Go to jeffbadu.com, jeffbadu.com, jeffbadu.com. I created that site, a free resource center where you can get articles, videos. Now there's, of course, some paid things on there too. My courses, my books. Right? I do have a fourth book that's coming out next year, by the way. So sneak peek. A fourth book that's coming out next year. It's the part 2 to my Infinite Expansion book, which you can get on my website as well. But I wanted to create something, and over time, I've literally, I kid you not when I say this, the stuff you see on the website and in the course, in the 3-step infinite wealth building formula, I've spent over 1,000 hours studying. Over 1,000 hours studying. This year alone, and I'm being very conservative here, this year alone, I've spent 300 hours studying it, learning it, perfecting it, teaching it to others. 300 hours minimum. Right? So that 1,000 number, that's extremely conservative. It's probably about 2,000 to 3,000. But I'm being very conservative and just saying I've poured 1,000 hours of research into one formula. It's called the 3-step infinite wealth building formula, which is the marquee behind the Infinite Wealth course, which you can get on my website, the jeffbadu.com website. All right, so here we go. The first step in the 3-step infinite wealth building formula is you've got to start a business. When I came to the United States of America, I was 8 years old. I came here with my older sister. Right, I was 8 years old, and basically, when I first came, they told me this American dream. They said, go to school, get a job, buy a house, get married, and then retire with a pension. Go to school, get a job, buy a house, get married, retire with a pension. You know, that they said that was the American dream. I'm like, okay, there's components in there that's really, really nice. Right? I did go to school. I did get a job. I was working at PricewaterhouseCoopers or PwC for a few years. I did buy a house. I actually bought a condo back in 2016. All right. I did get married. Shout out to my beautiful wife, Miss Yvonne Badu. I did get married. So I was living part of the traditional American dream. I have not, quote unquote, retired yet, according to the American dream. But then I read a book called Rich Dad, Poor Dad, which, by the way, for Christmas this year, I'm not giving out clothes, shoes, jewelry, none of that. I'm giving out the Infinite Expansion books. I'm giving out the, basically Rich Dad, Poor Dad. I'm giving out Cash Flow Quadrant. To the kids, I'm giving them the Cash Flow board game for kids. To some of the adults, I'm giving them the Cash Flow board game. Right? Because those are the gifts that people will truly thank you for. The clothes, okay, cool. You gave me some clothes. Good, right? I get clothes, and I'm going to throw them away a year or 2 years, 3 years, whatever. It's good, right? You got clothes to wear. You got something on your back, something to cover you, keep you warm. It's always great. But when I'm talking about giving a gift to somebody, I'm giving them a gift that's going to make a long-term sustainable impact for them, their families, and 1,000+ generations to come after them. So those are the gifts I'm giving this Christmas. And so with that, I came to America, and later on, so they told me about this American dream, which is like, okay, it's nice. But then in 2015, between 2015 and 2016, I read the book Rich Dad, Poor Dad. And it changed the entire trajectory, the entire perspective of my life when it comes to wealth and abundance. Robert Kiyosaki, who's the author of Rich Dad, Poor Dad, shout out to Robert Kiyosaki, he told me that the real American dream is to own a business, start a business, and to acquire real estate. What type of real estate? Rental real estate, one that cash flows and produces income, passive income. He said that is the American dream. If you want to retire in America, you got to start a business, and you have to acquire real estate that provides you passive income so that you no longer work for money. And he said in the book, the rich, the quote unquote rich, don't work for money. And then what I later learned too is that the rich, quote unquote, I always put that in quotes because some people take it literal, right? The quote unquote rich don't pay any taxes. And at first I was like, Robert, this is nuts. Like, how in the world can you not pay income taxes? And it's actually true. If you looked at the tax return of the top 10 wealthiest people on the planet, you'll notice that a good handful, or let's say the top 50 people, as you know, when we compare net worth to each other, you'll notice that a majority of them don't pay any income taxes. And I said, Robert, this is nuts. So what did I do? I spent 1,000+ hours researching, learning how in the world can the rich and the wealthy not pay income taxes legally. And then I learned a thing, and I mentioned this in a course too, by the way, that the tax code was created for you, not against you. Let me repeat that one more time. The tax code, the Internal Revenue Code in the United States of America was created for you, not against you. When I learned that, it changed everything. All right? It changed everything. It changed my entire perspective when it comes to taxes and when it comes to life in general. And that they created the Internal Revenue Code, the IRC for short, for you, not against you, if and only if, this is the part you got to get, if and only if you are a business owner and or you're a real estate investor. If you are a W-2 employee, the tax code was not, and I repeat, was not created for you. It was created against you. So why does the average person pay 40% or more in income taxes? Is because the average person is in the average category, W-2. No business, no real estate, nothing. Just go to job, come home to your kids, repeat the cycle over and over again. And that's the term what we call a rat race, the rat race, a hamster on a wheel. What happens when you put a hamster on a wheel? He keeps going and going and going and going and going and going and going. All of a sudden, he doesn't get anywhere because he's repeating the same process. Why are most Americans one missed paycheck away from being in financial distress or bankruptcy? Because they don't understand the 3-step infinite wealth building formula, right, which I'm teaching you today. Now remember, the book Rich Dad, Poor Dad does an excellent job laying it out, mindset. I recommend everybody listening today read the book Rich Dad, Poor Dad. All I did was simplify the wealth building process in literally 3 hours. And today, I'm going to simplify it for you in about 15 minutes. So we'll do 5 minutes each segment, right? 5 minutes each segment. You got to start a business, step one. This can be a business you start from scratch, a business that you partner with somebody on, or you are providing services on behalf of a business to their clients. An independent contractor, 1099, right? Whatever you might call it. And one of the reasons why you want to start a business is because it activates the tax code for you. It no longer works against you. It now activates the tax code for you. Now you can take legal tax deductions in your business. For one, you're creating an asset, a business. You're creating something that you can pass down from generation to generation to your kids' kids, and the kids that come after them, and 1,000+ generations that come after them. All right? So you're creating an asset. You're creating something that can legitimately put money in your pocket. We're not starting a business just because of tax deductions. We're starting a business to create wealth, build wealth. And notice how it said create wealth. Not to get wealth, create the wealth. Right? Whether you do it from scratch, you partner with someone, or you join forces with somebody else, it doesn't matter how you get there. All right? So when you do that, what you're also allowing yourself to do is, as you're making money, as you're generating profit, let's say you made $150,000 in your business in revenue, income, money that came in, and then you spent $50,000 in expenses. What you have now is $100,000 net profit. How we got the $50,000 is called tax write-offs, deductions. All right? The phone that you're using to call your clients and occasionally your family members. Laptops, computers, Apple Watch. How in the world can I tell time to you guys speaking to you about business and wealth if I don't have an Apple Watch? Right? How in the world can I present to you today if I don't have a suit jacket? How in the world can I talk to clients if I don't have a t-shirt on or a v-neck? How in God-given's world can I literally meet with a client and I don't have a haircut? I can't. So when you're doing these things, what you're doing is creating a tax shelter, tax deductions. You're literally able to create tax loopholes just off of having a business. Right? Tax loopholes, deductions are things you're spending in your business. You may not be thinking about this way. It could be money you're already spending. Eating dinner with your spouse, for example. Going out to eat. Ordering in. Right? My wife Yvonne and I, we actually went to Good to Go last night. Right? Good to Go restaurant. Shout out to the Jamaican restaurant. We got a meal. We wrote it off. Why? Because we discussed business during that meal. All right, so imagine if all of your meals, or even 90%. Imagine if 90% of you eating, something you have to do anyway, became a tax deduction because you discussed business before, during, or after the meal. And then what about travel? I recently went to the Virgin Islands to celebrate my beautiful wife, Yvonne's, graduation. And guess what? We claimed it as a tax deduction. Why? Because we had a board meeting in the Virgin Islands. Whether it was 5 minutes, 10 minutes, an hour, whatever it was, and we talked business a good handful of the trip. We're business partners. We own a company together, life insurance company together. All right, so what happens when you start a business is now you're channeling all your deductions, your vacations. I'm going somewhere else next month, right? You're channeling all of that into legal loopholes, tax deductions that reduce your taxable income so that instead of a W-2 employee who's got to pay taxes on $150,000 of their W-2 income, you as the business owner who makes $150,000 in your business gets to write off expenses, let's say $50,000, and now you're paying taxes on $100,000 as opposed to $150,000. I mean, do you see how that can affect your budget in a massive way? So that's step one, the business. Step two, real estate. You've got to invest in real estate. You cannot get away with building wealth without investing in real estate. I'm telling you that right now. There's no wealthy person I've met on this planet that does not own real estate. Not a single one. And if you want to go back to the days, Mansa Musa, not only did he own gold, camels, horses, and unfortunately people, right? He also owned real estate. John D. Rockefeller, what did he own? Real estate. Warren Buffett, what does he own? Real estate. One of Warren Buffett's biggest regrets was not getting into real estate sooner. All right, Oprah Winfrey, real estate. Jay-Z, real estate. Michael Jordan, real estate. LeBron James, real estate. There's a common theme. 9 out of 10 millionaires got there through real estate. Not only can real estate produce cash flow or make you passive income, but you can also claim a tax deduction known as depreciation. The biggest D word in the tax code, or on the planet for that matter. There's no word bigger on this planet than depreciation. No D word bigger on this planet. Depreciation is when you can claim up to 25% of a building's purchase price in the first year of acquiring the building alone. So if you bought a $400,000 building, you can claim up to $100,000 tax deduction. This is a strategy called cost segregation or accelerated depreciation, by the way. Right? A $400,000 building, you get a $100,000 tax write-off. So imagine in your business now, you made $150,000 in revenue. You spent $50,000 in expenses or write-offs. And now you have a net profit, what's left over at $100,000. You've already written off everything, so you don't need the money. You don't need the $100,000. You've already spent, right? You've already got your expenses out the way because you're living through your business now. All right? But you're smart enough to say, hey, why not go out and buy a building, a rental property? Whether you put down 3.5% utilizing the FHA, Federal Housing Administration loan, or you did a 20%, 25%, whatever it is, whatever the down payment is. Even if you put down 0% using a VA loan, right, you can do this strategy. So now my $100,000 in net profit minus my $100,000 tax deduction, known as depreciation, equals zero. You now owe $0 in income taxes. Zero, zilch, nada. Because you took your business profits, you took some or all of it, put it into a rental property, and you got to claim a depreciation. By the way, why is real estate so powerful? Because the bank will quadruple your money, typically. You put down 25%, the bank gives you 100%, or 75% of the money. The bank is your partner. On a $400,000 building, you put in 100, the bank gives you 300. That is powerful. That's what you call leverage. The ability to buy more with less of your own. Even if you put down 3.5%, the bank now gives you 96.5%. And you put down 0%, well, the bank gives you 100%. And for those that say, oh, I don't have the money to buy real estate, they have down payment assistance programs that allow you to buy where the government will literally cover your down payment. On up to a 4-unit building, the government will literally pay your down payment in full to the seller or to the lender. Powerful. They have programs like NACA, N-A-C-A in Illinois, where you can literally buy a 4-unit building. A 4-unit building with 0% down. No money down is a thing. And you can get the tax deduction. I mean, it can't get any better than this. It can't get any better than this. Now, to complete the formula, this is why I add my mix. And a lot of people don't talk about this part. What if we reinvested your profits from your real estate? Because you don't need it, clearly. You're already living through your business. You got real estate producing you passive income that you don't even need because your business is paying for all your stuff, all your expenses. Your car, by the way, whether you want a G-Wagon, a Porsche, whatever it is, you get to write all that stuff off too. All right, so you basically have your business that's paying for all your expenses, and then you got the real estate that you're funneling money through. You're funneling money through and getting a tax deduction known as depreciation, so that you're wiping out your taxable income, your tax liability down to zero, and you might even get free health insurance. You might get the earned income credit. If you got kids, the child tax credit. You can get, if you got a Tesla, you can get the electric car credit. You can get the economic rebate credit, the stimulus checks. All right, and then the premium tax credit where you don't have to pay any money for health insurance now. So not only are you saving money on the front end of taxes, you also get money on the back end in a tax refund because now you're becoming eligible for these tax credits. When Bill Gates tells you he makes $1 in income, that is exactly what he means. He makes $1 in income. At least when he used to run Microsoft. He had a salary of $1. $1. Why? Because now he can qualify for these loopholes. He might have got the earned income credit. Right? He might have paid no money for health insurance. because now he's eligible for all these credits. His taxable income may very well be zero every year. To the government, he's poor. To the world, he's rich. All right, so just something to keep in mind, right? Which side do you really want to be on? Which side do you want to be on? Which side do you truly want to be on? The guy who looks poor on paper, but when you look at his true wealth, and when I say paper, I mean his tax return. When you look at his true wealth, he is a multi-billionaire. Or the person who stunts and looks rich on their tax return, but in reality has nothing to show for it. Right? Which side do you really want to be on? And so when we talk about the 3-step infinite wealth building formula, we want to be the guy who looks poor on paper on his tax return. But man, when you look at his net worth, his asset statement, it is loaded with assets, producing passive income every single month. There you go. Desi says option A. Absolutely. When I found this out, I became the first guy, right? I'm like, I want to look as poor as humanly possible on my tax return. Some people might be caught up on status. People, I'm like, hey, screw that. If I can legally avoid paying income taxes, that's where we at. All right, but step 3, remember, step 1 is to start a business. Step 2 is to own rental real estate. Step 3, the final step, is life insurance. This is where you reinvest your profits. You're protecting yourself and you're building the true infinite wealth. The formula is not complete. I repeat, the formula is not complete until you complete step 3. Step 3 is very important. This is when you protect your family. This is when you protect your wealth. This is when you protect yourself. Basically, there's a policy called the Index Universal Life, Premium Finance Index Universal Life, that allows you to put minimum $20,000 a year, right, into a policy, and let's just round it up. Let's call it $25,000 into a policy, an investment account. A bank will come in, just like with real estate. They will match you. They will give you 3 times your money. They will give you $75,000 a year, and get this. You only have to contribute for 5 years, and that's it. For 5 years. That is it. A 5-year investment. You put in 25, bank gives you 75. After year 5, you're done. You sit back, relax, go on the beach, go to Cancun, write it off, of course. Whatever it is you decide to do. And when it comes time for your eggs to hatch, age 65, 70, 50, whenever you decide to retire, you can start pulling out money tax-free from the policy, and you build an estate tax-free from the policy each year. Right? We got clients that can pull out $100,000 a year tax-free from their policy each year for the rest of their lives. Don't have to pay a penny in income taxes. And then when they pass away, God forbid and rest in peace to their soul at the time, what happens is their family gets to keep the death benefit, the money left over, tax-free as well. So while you were living, you were enjoying the fruits of your labor through one policy, one investment. And then when you pass away and leave the world, now your family gets to keep it. Tax-free. My 2 favorite words in life, tax-free. So imagine you got your business that you're living through where you're writing off everything. You're writing off everything through your business, your clothes, your shoes, your watch, turning your wedding into a networking event. All right. So many strategies. All right. Shout out to, let's see, the Soul Speaker. The Soul Speaker says, this is why I'm becoming a client of your firm. Absolutely. Shout out to the Soul Speaker on Instagram. All right. But imagine you got your business. You're writing off everything. If you got a wedding coming up and you don't have a business, you're making a big mistake. You're making a massive mistake. Right? So with that, what you can do is you're writing off everything through your business. And then as you're making profits or you're not even making profit, maybe you found a down payment assistance program, you reinvest the money into an income-producing asset such as rental real estate. And you build passive income, and you get a deduction known as depreciation, the biggest D word on the planet, especially in the tax code. The depreciation reduces your taxable income down to zero and makes you eligible for credits like the earned income credit, the child tax credit if you got kids, if you're in college, the American Opportunity Credit. The premium tax credit, which is for health insurance, and then also the economic recovery rebate credit, the stimulus checks. All right, so you become eligible for all these credits, and if you bought a Tesla, an electric vehicle, now you get the electric vehicle credit. You get all these credits, and most of them are refundable, meaning you can get a tax refund from them. Imagine if you did this every year, and then you completed the final step of the formula: premium finance index universal life insurance policy to build wealth on a multi-generational tax-free basis for the rest of your life. So what do we cover in the Infinite Wealth course? It is exactly what I just explained to you. It goes more into detail as to how to document specific tax deductions and loopholes, how to keep your documentation nice and tight. It's all about documentation when it comes to taxes. All right, how to make sure that you are keeping good books and records. And then how to get your stuff structured correctly and maybe an S corporation. All this covered in the course. It's a 3-hour course. And basically, you can do it at your own time, at your own pace. If you go to the second link in my bio on Instagram, you can get a link to the course. Type in the code HUNGRY, That's right, the code HUNGRY for 60% off. 60% off the course. This is the last time this year that we're doing a special that good, right? So I encourage you to take advantage of that. I also posted the direct link in the chat. You can go to my website, jeffbadu.com, to get the course. So I encourage you, take advantage, right? Take advantage. Reach out to me with any questions. Thank you, Desi. She says, great session tonight. Absolutely. So we are out of time, unfortunately. And with that, I do want to thank you all for tuning in to WJC LP 98.3 FM Chicago. And with that, I do hope you enjoy the rest of the evening. My name is Jeff Badu, and I look forward to continuously and consistently delivering you all some content. Thank you.